If you think you've already missed the AI boom, you might want to pay very close attention to what's happening right now. Because this isn't the end of the move. This might actually be the beginning of the next phase. And here's the part most people don't realize. While headlines are just starting to catch up, while social media is getting louder, while retail investors are slowly waking up, smart money has already moved. Not yesterday. Not last week. Months ago. And what you're seeing right now, this sudden surge, this renewed excitement around AI stocks, this is not random. This is not hype out of nowhere. This is the result of positioning that has already taken place behind the scenes. And if you understand what's really going on here, you stop reacting like the crowd, and you start thinking like the market. So let's break this down in a way that actually makes sense. Because right now, something very familiar is happening. We're entering that phase of the cycle, where early investors are already in profit, institutions are increasing exposure, and the general public is just starting to notice. And historically, this is where momentum begins to accelerate. But before we go further, you need to understand one key truth. Markets don't move when everyone agrees. They move when a small group of people see something early and act on it before it becomes obvious. That's exactly what happened with AI. A couple of years ago, AI was just a concept for most people. Something interesting, maybe even futuristic, but not urgent. But behind the scenes, companies were investing billions. Infrastructure was being built. Data centers were expanding. Software was evolving. And the people who were paying attention back then, the ones who understood what was coming, they positioned themselves early. Now fast forward to today. AI is no longer a concept. It's everywhere. It's writing, coding, designing, analyzing, automating, and most importantly, it's saving companies time and money. And in business, anything that increases efficiency at scale becomes incredibly valuable. That's why AI stocks are exploding again. Not because of hype, because of demand. Real, measurable, unstoppable demand. But here's where it gets interesting. The market doesn't just price in what's happening today. It prices in what's expected to happen next. And right now, expectations around AI are not slowing down. They're expanding. More industries are adopting it. More companies are integrating it. More capital is flowing into it. And that creates a powerful cycle. Investment leads to innovation. Innovation leads to adoption. Adoption leads to revenue. Revenue leads to higher valuations, and higher valuations attract even more investment. That's how trends turn into megatrends. And AI is no longer just a trend. It's becoming infrastructure. Now let's talk about smart money. Because this is where most people get it wrong. When people hear smart money, they think it means someone with better information. But it's not just about information. It's about behavior. Smart money doesn't wait for confirmation. It anticipates. It studies patterns. It looks at where the world is going, not where it currently is. And then it moves early, when things still feel uncertain. That's why by the time a trend becomes obvious, smart money is already positioned. And what you're seeing right now in AI stocks is the early phase of public participation. Volume is increasing. Attention is rising. Momentum is building. But we're not at peak hype yet. And that's important, because the biggest gains in any cycle usually happen between early adoption and mass awareness. Not at the very beginning, not at the very end, but in that middle phase where belief is growing, but not fully saturated. That's where we are right now, and this is where things can move fast. Now I want you to think about something. Why do most people miss these opportunities? It's not because they're not smart. It's because they're waiting to feel comfortable. They want certainty. They want validation. They want to see proof that something is safe. But in the market, safety usually comes at a higher price. By the time something feels obvious, It's already expensive. By the time everyone is talking about it, the easy gains are gone. And that's why positioning matters more than timing perfection. You don't need to catch the exact bottom. You just need to be early enough in the trend. And AI is still early in its full impact. Yes, some stocks have already gone up. Yes, there has been volatility. But zoom out. We are still in the early stages of a massive technological shift. Think about the internet in its early days. Think about smartphones when they first started gaining traction. Think about cloud computing when companies began migrating systems online. At every stage, there were people saying, "It's too late." And at every stage, they were wrong. Because the real growth came from adoption, not invention. And AI is now entering the adoption phase, which is where exponential growth tends to happen. Now let's bring this back to something practical, because this isn't just about understanding what's happening. It's about knowing how to think about it. The biggest mistake you can make right now is chasing blindly. Just because something is going up doesn't mean every opportunity is equal. This is where discipline comes in. You want to focus on companies that are not just talking about AI, but actually building, enabling, or scaling it. Companies that provide infrastructure. Companies that integrate AI into real-world systems. Companies that benefit from increased usage. Because in every major trend, there are leaders and there are followers. The leaders capture most of the value. The followers ride the wave temporarily. And smart money focuses on leadership. Another thing you need to understand is volatility. When something grows fast, it doesn't move in a straight line. There will be pullbacks. There will be corrections. There will be moments where it feels like the trend is over. And that's where most people get shaken out. They enter late at emotional highs and exit early at emotional lows. But the people who benefit the most from these cycles are the ones who understand the bigger picture. They expect volatility. They use it. They don't panic when prices dip. They evaluate. Because in strong trends, dips are often part of the structure, not the end of the story. Now let's talk about timing again, but from a different angle. You don't need perfect timing. What you need is consistent positioning. This is why many experienced investors don't go all in at once. They build positions over time. They add during weakness. They stay patient during noise. And they let the trend do the work. Because at the end of the day, markets reward patience more than precision. Now here's the bigger picture that ties everything together. AI is not just another sector. It's a layer that sits on top of everything. Finance, healthcare, education, manufacturing, entertainment. Every industry is being touched by it. And when something has that level of reach, the economic impact becomes massive. That's why capital is flowing into it aggressively. That's why companies are racing to adopt it. And that's why investors are paying attention, because they're not just investing in a product. They're investing in a shift. And shifts like this don't happen every year. They happen once in a while, and when they do, they create outsized opportunities. Now let's be real for a moment. Nothing is guaranteed. Markets can change. Sentiment can shift. Short-term movements can be unpredictable. But long-term trends, driven by real innovation, tend to persist. And AI is one of the strongest long-term trends we've seen in years. So the real question is not, is this the perfect moment? The real question is, do I understand what's happening well enough to position myself intelligently? Because the people who win in these cycles are not the ones who react the fastest. They're the ones who understand the deepest. They see beyond the noise. They focus on direction. They stay consistent. And most importantly, they act while others hesitate. Right now, AI stocks are moving again. Attention is coming back. Momentum is building. But we are not at the end of the story. We are in the middle of it. And the middle is where decisions matter the most. Because this is where you either step in early enough to benefit or wait until it feels safe and pay the price later. So don't get distracted by headlines. Don't get pulled by emotions. And don't assume that just because something has moved, the opportunity is gone. Because in markets, the biggest mistake is not being wrong. It's being late. And right now, you still have a chance not to be. So the only thing left to ask yourself is this: are you going to move with the trend? Or watch it move without you?